And good morning, everybody. It's Dan Latto speaking. Hope you're well. Welcome to the Daniel Latto podcast. And if you may have noticed, we are not called the Business Growth Show anymore, nor the Wealth Creation Podcast, or the Cryptocurrency Show, or any of that stuff. And it's taken me ages to come up with a thing. And I'm like, just call it your own bloody name. Everything else is your own bloody name, so just call it your own bloody name. So anyway, welcome to the Daniel Latto podcast, where we talk about all sorts of different stuff, all related to business, wealth creation, mindset, cryptocurrency. I'm reading off the top here, property, mindset, all that stuff, all that NLP stuff, because what I realised was that really what we talk about is all of that stuff combined. It's all about where are you today, where do you want to be 5 years, 10 years, 20 years from now, and what are the steps that can enable you to get there, to enable you to hit your results. And when I look back at my journey over the last 23 years of investing, I started investing at age 26, and one of the keys to making a lot of money over the next 20 years was to earn as much money as I could. And one of the ways in which I did that was I went from 15 grand a year to 100 grand a year in about 4 years flat, which is pretty amazing, I think. But then we started to buy assets and all of that kind of thing. We started doing that about 23 years ago when I was 26. And here we are today, and as we look back, all the different things that we've done. We've walked on burning hot coals at Tony Robbins. We've broken arrows with our throat. We've bent metal rods with our throat. We've done truly amazing things. We did the one red paperclip challenge, which is where you get a paperclip and then you swap it and you swap it and you swap it and see how far you got. And in about 3 or 4 hours, I think we ended up with about £230 worth, euros worth of stuff when we did that. And so we've done all sorts of different things to challenge us, to grow, to get us to where we want to get to. And in the next 23 years, obviously I'll be 72, 73 then, we've got goals and targets that we want to hit for that as well, so that we can pass on all that hard work that we've done onto our children and our grandchildren and so on and so forth. And so we've still got an awful lot to do. And in fact, one of the things that we really want to do is create some kind of education company that is good enough for my children. And so when I say that, what I mean is not only good enough for my children, but allows other people to jump on board as well, so that they can get the same level of education from a wealth creation and a mindset perspective as the kids have as well. And so that's probably something that we're going to create in the next 23 years as well. We're talking about leaving something behind there, more as a long-term thing once I'm long gone. Whether that happens or not, who the hell knows? But that's kind of a plan, and we'll see where that gets us. But in today's session, we're not going to do that. In today's session, we're going to talk about why you should be investing in assets. And obviously, we've got the thing going on with Ukraine right now. We've got a thing going on with pandemic right now. It's a pretty dark place. And one of the podcasts I actually changed the podcast I was going to do, and it was a podcast about how to survive these tough mental times that we're going through. And you know what? I decided not to do it because I'm not sure I could get through it emotionally without tearing up through the podcast, and that's not something that I want to do. I don't want to jump into bed and be with everybody else where it's, everyone else is really sad, and I don't want that. I want this to be a beacon of light, not a beacon of, oh, so depressing. So that's why we're not going to go down that path, and we might bring some of that stuff into it through mindset, as we go through the podcast. But it's not, if you're wondering why is Dan not talking about Ukraine or even the pandemic anymore, I just don't want to be there. This should be a beacon of light, so that you're looking at it and you're going, do you know what? I want to head that way. I know shit is going on. I know the world is a mess. And we all feel incredibly helpless. We felt helpless with the pandemic. We feel helpless with Ukraine. And it's just a bloody mess. And I'm like, how can we make the world not be a mess? And I think the best way of not making the world a mess is to sort yourself out, and then sort your immediate group out, and then sort out your extended group, and move forward like that. You can be the shining beacon as well if you like. Anyway, let's not talk about that. Let's talk about why you should be investing in assets. Okay, number one then, high inflation. Right now inflation is 8, 9, 10%? And that's the official figure. The ONS said last week that rent inflation was like 2%. Like, what planet are you living on? Are you living on planet Boris, where everything's a goddamn lie? Is that where you live? There's no ways rental inflation 2%. My rents have shot up and will continue to shoot up, I think, over the next few years. I'm hoping, touch wood, that's what's going to happen. It's good for me. If you've got assets and you've got property assets, that's awesome. It's not so good for the person, on minimum wage driving an Uber, not even on minimum wage, are they? Not good enough for the person dropping food off or the person stacking shelves at Tesco. But we've got high inflation. Not a lot you can do about it. Inflation is just a consequence of printing off all that money. You know, in America, and I don't know the stats for the UK, but in America, I think it was something like 75% of all US dollars were printed in the last 18 months. Every US dollar that's ever existed, more has been printed in the last 18 months. 75% of all US dollars ever printed were printed in the last 18 months. Now think about that, and inflation's transitory, and we've done a podcast about that, and it's absolute bullshit. It's absolute bollocks. It's just things that people say to deflect away from the fact that there's high inflation, and there'll be something else. You know, especially in the UK with Boris, if he can throw the dead cat on the table, so no matter what's going on, people talk about the dead cat on the table, then that's what he'll do. If he can take the UK to war with Ukraine, boy, do you think he's a Thatcherite? Do you think he sees what happened with the Falklands War and he's like, oh, there's an opportunity, let's see what we can do there? Of course he bloody well is. And obviously we all feel incredibly helpless about all of those situations, not just for Ukraine, not the Ukraine, Ukraine, not the Ukraine, I hate that. You don't say the France or the Spain, we say Spain, France, but for some reason we say the Ukraine. It really annoys me. Even though I say it myself. But look, we've got high inflation. What do you think is going to happen with war? Do you think inflation is going to drop? Do you think fuel prices are going to drop? I mean, in fuel prices, I had a direct debit just yesterday, £365 for one of my HMO fuels bills. $365. I mean, we're actually converting it. We stopped doing HMOs, mini-mos. I'm getting older, can't be bothered with all the hassle, and also fuel bills are going up. So we're converting that back to just a 4-bed LHA house, and the profit is only slightly less without all the hassle. So that's one of the things that we're doing there. But we've got high inflation, and you know, we're fortunate because we started this journey 23 years ago. And when you start investing, we're going to cover this because it seems slow now, right? Number 4 is what we're going to talk about here. But when you first start investing, it feels like it's never going to take off. And I've had property coaching clients, and they started coaching, and they're like, oh, I've got this deal, but it doesn't stack up. I'm like, yeah, but dude, think about 10 years from now, 20 years from now. Rents are going up. You know, your prices are going up. Your value of your pound is going down, the value of your debt is going down in real terms, and they couldn't see beyond that. And I get that it's slow now. You know, if you're buying, I saw a really good post actually by a guy called Ryan Stewman on Facebook. He's a Facebook friend of mine, and he's absolutely minted. Knows everybody basically, knows Grant Cardone, and hangs out with all these people. But what he was saying was, buy assets now. And I'm like, this dude is so on point. Buy assets. And the assets can be, and he mentioned a number of assets like crypto, property, obviously real estate is property, Rolex watches. Like, have you seen the price of Rolex watches recently? Like, if you go to a Rolex shop, you can't buy a Rolex today from a Rolex shop. They've got all the security guards. Let me just see, Grizzly. Yeah, a lot of people think about the now and not the long term. Absolutely. They've got the security guards in Rolex. All the Rolexes in the Rolex shop are not real Rolexes. They're all kind of fake Rolexes. You can't actually buy a Rolex. The prices are going up. You look at second-hand cars. Second-hand cars today are more expensive than they were 2 years ago, and they're 2 years older. It's ridiculous. And then if you think about things like exotic sports cars, old Porsches, old Ferraris, old Lamborghinis, they're just going to go up in value as long as you don't break them. And the reason why they're going up in value, 2 reasons on cars. One is that obviously inflation, and it's an asset that's getting older, and increasingly rare because it's getting older. And then the second reason is that if there's only 400 Lamborghini Contacts around the world and somebody has a crash, well, there's only 399. And next year there'll only be 398, and the year after that it'll be 350, or however many get damaged, and so on. And so those prices are going up. But these are all assets. Now, a true asset for me, as we've said many, many times, is something that puts money in your pocket. If you've read Rich Dad, Poor Dad, you'll understand what we mean by that. An asset is not cryptocurrency. It's not gold, and it's not Rolex. For me, that's not an asset. That is a gamble on a future value. And for me, that's not investing. Investing is you put some money in, you get a monthly, a quarterly, or an annual return of some kind. And so assets are things like stocks and shares, property, businesses, businesses really should be stocks and shares unless it's your own business. But if you're running your own business, that shouldn't be included. That's not an investment. If you're running your own business, you're exchanging your time for money. My digital marketing agency is not an investment. Sure, I'm sure it's going up in value and it gives cash flow, but I'm actually exchanging my time for money. I'm running a business. That's a lot different than actually investing £1,000 in Tesco shares. And by the way, if you've got an Apple iPhone worth £1,000, you should have at least £1,000 worth of Apple shares. If you drink Starbucks coffee, you should have Starbucks shares, okay? At least £1,000 of Starbucks shares, because that should be paying for your coffee fetish that we all have. So you should be investing in assets, because these asset values are going to go up. They have to go up. They're printing so much money. And of course, with war on the doorstep, I kind of think this will peter out quite quickly, by the way. I'm hoping so, like everybody else. But what if it doesn't? What if we've got high inflation for a long time? What if inflation is going to run at 5% for the next 20 years? Imagine that. And by the way, that's not 100%. That's more. Because it's compounded, kind of in reverse, but it's compounded. If inflation's 5% for the next 20 years, something that was £100, that's now £200. But the amount of money that's used to buy the original £100 is in what did I say? 20 years' time is now valued at much, much lower. And so you've got to start investing in assets. It's like, now is the time. Obviously, the best time was 20 years ago, 30 years ago, 40 years ago. But if you couldn't do it then, you have to do it now. And as we've said, one of the reasons why you should be investing in assets is monthly cash flow. And an asset for me is something that absolutely is something that gives you monthly cash flow, quarterly cash flow, or annual cash flow. Property for me has been so good to me. I mean, we are right in the middle of right now doing one of the worst refurbs, that we've ever had to do on a property. It's so bad, we've actually had to get in touch with social services, who I'm sure will do fuck all as usual, because I'm concerned about the children living in the state of that property. They've moved on to a different property, but boy, I mean, human feces everywhere. I mean, it's such a mess, and we couldn't get in because of COVID. We've not been able to get in for 2.5 years, 2 years. So we've not been able to get in to do any inspections and so on. Anyway, we got screwed on it, but even without all that, and we're talking a £10,000-15,000 refurb, it doesn't matter. That property has paid for all of that. That property actually pays for this villa. That property brings in £900 a month. Our villa is €1,000 a month. We rent it. It's a 4-bed pool with a house with a swimming pool, 100 metres from the beach next to the Mediterranean. Amazing, right? €1,000 is paid for by our DSS tenant, who's screwed the place, but he paid for our villa every single month for the last 6 years. How amazing is that? And fine, he screwed it, and it cost 10 or 15 grand. That's okay. We'll go in, we'll do the work. But when we're back to generating enough cash flow to never have to worry about money. So on the first of each month, I want you to get yourself to the stage where all of your cash flow is covered. All of your income, all of your expenses, it's covered. You never have to worry about, getting to the 29th of the month and thinking, oh, have I got enough money left? I mean, we're on the 25th of a 28-day month. I don't want you, if you're struggling right now going, oh, I've got bills at the end of the month. Like, I want you to be able to move your bills to the first day of the month, knowing that they are all paid. That's the whole purpose of the podcast, is to move you from where you are now to moving you towards a time when you can have more time freedom than financial freedom. There's no such thing as financial freedom. There's time freedom. I mean, obviously, there's such a thing as financial freedom, having your cash flow covering all your expenses. But the only reason you do that is to free up enough time so that, it's pouring down with rain today. But after this, I'm off to my local coffee shop, and for breakfast, I'm having a lime cheesecake. Oh, get in. How's that for breakfast? But that's because we've got time freedom. Now, we also put in hours and we work and so on, but the monthly cash flow will tell me, Dan, you have to work this month or you don't have to work this month. And for the last couple of years, we've not had to work. We actually grew a digital marketing agency because it's loads of fun. I actually quite enjoy it. So getting yourself to a position where by the start of each month, you've got your cash flow already covered. And the only way to do that is by buying cash flow in assets. If you're buying Rolex watches and Lamborghini contacts and cryptocurrency and gold, what are you going to do? Are you going to nibble on a bit of a gold, to eat? Are you going to scrape a few bits of gold off it and hand them in? You're still selling your original asset. You want an asset that generates monthly cash flow. This is why you should be investing in assets. And this is the other thing. I mean, the world is definitely changing. You know, if we look at, for example, universal basic income, like we're moving to a point now where, and we're not there yet, but we're going to be there in the next 30, 40 years without shadow of a doubt. And the point I'm talking about is this technological, what do they call it? They call it what do we call it? It's the name of a black hole. Not a significant, I can't remember. Anyway, they call it a technological point where we cross the threshold of this technological point. And this technological point is basically AI and robots. When those two things happen, and you look at Tesla cars and how clever they are right now, you look at those two things, 30, 40 years, you're going to have robots serving you cups of tea. You're going to have robots stacking shelves. Have you seen the Boston Dynamics robots doing backflips and dance moves, and the little dogs that they have? I mean, they're going to get weaponized. I'm sure you've all seen the Black Mirror episode where they've got those weaponized robotic dogs who ridiculously looked like Boston Dynamics dogs. If you saw that, so the world is changing. Fundamentally, it's changing. What are you going to do for work? There is a website that gives legal advice. And it is like the quality of the legal advice, like the accuracy is like 95%. And when you speak to a lawyer, their accuracy is like 85%. So they're 95% accurate, you know, more than the 85% that you get from an actual person. And this is happening. I know that we don't think this because for the last 100 years, we get up, we go to work, we put our socks on, we have a cup of coffee, we do the work, we speak to people on the phone. Look at the transition that we've had in the last 10 years. Look at the transition that we've had through, you know, mobile phones and the way that we interact with mobile phones and the way that the metaverse is going to come and absolutely kick our ass. And if you're thinking that Uber, I've had conversations with Uber drivers about this and they think I'm crazy. They're probably right, I am crazy. But they're out of a job in 10 years. You won't need an Uber driver. You just flag down a driverless car with your phone, you jump in it, it'll take you to where you want to get to. It's not even going to be a driverless car, is it? It's going to be a freaking drone with 5 propellers. You jump in it, takes you to where you want to get to, lands you on the beach, and you go for a swim in your mechanical robotic shark submarine or whatever it's going to be. Like, it sounds crazy, but in 30, 40 years, look at where we're going to be. It's 2022. Where were we in 1982? 40 years ago? Like, what technology did we have? Like, that's how crazy it is. Imagine where we're going to be in another 40 years. The world is changing, and your opportunity to earn income is only going to come from a couple of places. Like, people need to eat. Can robots provide food? Absolutely they can. And do you think they're going to get better? I've even seen a video of a robot that can cut tomatoes and make food. It's crazy, right? I mean, it's absolute cutting edge today, but in 20 years' time, it's not cutting edge. It's like having a microwave, you know? And then what else can you make money on? Well, people need somewhere to sleep. People need somewhere to live. Can robots do that? Not really. They might be able to build housing, maybe. But then you need all the planning permission and somewhere to actually put the housing. So I think housing is going to be it. And what about repairing a roof on a house? Do you think there'll be a robot that can just take all the tiles off, put new tiles on? Of course I can. I've seen robots laying, you know, the bricks that go in on diagonals. I've seen robots lay the whole road. The guy just puts the bricks on at one end, and and you won't even need that, will you? You'll have a robot that's putting bricks on at one end, and the other robot just lays the road. It's crazy. This is where we're heading towards, and if you can't see this, you're going to struggle, and you need to move yourself into a position where you can actually understand some of this, understand robotics and AI. I'm not saying that you need to understand it at a programming level, but if you look at someone like Gary Vee right now with NFTs, a wonderful, wonderful example. Gary Vee in the last 12 months has made $93 million from NFTs. And he does a video of him drawing a bloody bumblebee, right? And then that's an NFT, and when you buy that NFT, you then get lifetime access to all his events. Like that's crazy. You buy that NFT for $3,000. You sell that NFT because you've seen all Gary Vee. You sell it for $4,000. Gary Vee gets 20% of all those transactions that people are then selling on. It's truly amazing. right? And I don't understand NFTs. I understand it 95% more than the average person in the street, but I still don't understand it. I still not made money off NFTs. Gary Vee went in, dedicated himself 40 hours, 60 hours, 80 hours to understanding NFTs, made himself $93 million. The world is changing, folks. One of the things I really hate, by the way, is when people say, oh, I bought this JPEG, selling JPEGs for 400 grand. Moron, you're not buying JPEGs for 400 grand. You're buying an NFT for 400 grand. So when people talk about selling JPEGs, that's not what you're doing. That's not what's happening. It's like selling a postcard of a Mona Lisa for 400 grand. Like when you can buy one for 50 pence from a local shop. That's not what's happening here. Selling the Mona Lisa is not the same as selling a copy of the Mona Lisa. But the world is changing, and the terminology that we're using is changing. And if you're not adapting with this, if you think you're going to get up, you're going to go to work for the next 40 years, boy, I think you're going to be in for a really rude awakening. And I kind of need you to understand that now. Okay, next one then. Boy, it seems slow now. Well, Dan, I bought Bitcoin. I bought it at 49. It's now $34,000. Some people bought 69,000. Now it's dropped to 33, and now even worse for selling the damn thing. It's not a loss until you sell it, right? Until the loss is actually capitalized in some way. Hold on to that stuff. Not financial advice, of course, but I'm holding on for the next 5 or 10 years. Do I log in and check the price every day? Actually, not really. Sometimes I forget. Sometimes I remember. So I'd log in maybe once a week. But as we keep going forward, I bought Bitcoin, by the way, at a very low price. Like, not really, really low. Like, I'm not going to say how much it was. But I bought Bitcoin at a decent price. I should have bought more. Obviously, never did. And when we look back in hindsight, that's what we should have done. And so the rise of Bitcoin can actually give a false idea as to the potential growth. Okay, because if you bought in at 69 and it's now 34, 38, whatever it is today, then you're like, well, you've just lost money faster than you've ever lost any other money in your life, right? So for me, Bitcoin, and we talked about this, it doesn't provide monthly cash flow. It's not an asset that I would buy as a true investment. I have Bitcoin because I put it through the pension. All gains are tax-free. I had some self-invested pension pot that I was like, oh, let's just chuck that at it. That's what we did. We're going to forget about it for the next 15, 20 years. We'll see where we are then. And so for me, it's not a true investment. And this isn't really about cryptocurrency, but this is about you investing for the long term. And the long term is 15 to 20 years, maybe 25, maybe 30 years. And people go, oh, Dan, but I'm 40 and I'll be 70. I don't want to invest for 30 years. For what? So you're not going to do it? You're not going to do it at all? It took me 23 years, that's how long we've been investing, 23 years to get to the stage where, now rental prices are really going up because inflation's going up. And guess what? Our mortgage amounts haven't gone up. In fact, if anything, those mortgage amounts have gone down because inflation has eroded the value of a pound. So this is where we're at. It seems slow today, but in 15 or 20 years, as you look back at that time, you'll be so grateful that you actually did that. Let me just grab a quick drink. So you're going to be so grateful that you did that. But you've got to start today. And you start with £1 or €1. You start with £5 or £10 or £100. Or you start with £25 a month. Or you start with £15 a week. Using, something like Coinbase. Not Coinbase, Binance. Which is how we currently buy crypto. And we buy it weekly, by the way. And we have an order that goes through. It'll go through tomorrow. It goes through every Saturday. Whatever the price is, it's got a certain amount that we're buying it. And that's called dollar cost averaging. And if this terminology is new for you, you've simply not read enough books on investing. It's like, in 20 years' time, and it doesn't even have to take 20 years' time, because I'll tell you, I'm 49, I turned 50 this year. When I turn 60, and turning 60 just sounds just weird. It sounds like it should be an old person, but I don't feel like I'm an old person at all. But by the time we turn 60, that cash flow that we're generating from our rentals, if inflation's 3 to 5% in the next 10 years, that's another 50 or 60% increase on our rental income. Boy, that changes things significantly, by the way, for us as cash flow. But the only reason it changes things significantly is because we're already 23 years in. That'll be 33 years in. And so the longer you've got, the better it is. This is one of the reasons why if you can get to the age of 18, you start putting money away. Excuse me. We've just opened up junior SIPs for my kids so that they can have money being put away for their pension. So at pensionable age at 57 or 60 or whatever it's going to be, they're going to have a large pot of money. But if you're 18, you should be putting money away. £50, £100, £150. The more that you can put away today, the better it's going to be. So, there's that age-old example, someone who puts £200 a month from the age of 20 to the age of 30 and then stops, never touches it ever again, versus somebody who's putting in from the age of 30 to 50 the same amount. The first person has more money at age 65 and 70 than the second person. And that's because it's compounded longer. It's like, was it Einstein who said it was the eighth wonder of the world, compound interest, and people just don't get it? Now, you can get really clever on compound interest, not just putting it into a bank account where you're going to get 0.01%, but you put that money into an asset that goes up in value, into an asset that pays you monthly cash flow every single month, into an asset where the loan that you've taken out actually goes down in value because your cash is being eroded over the next few years due to all that money printing that we've had and just general inflation. £1 today will buy you more today than £1 will get you in 20 years' time. £1 in 20 years' time will be worth 50 pence equivalent. And so these are all the reasons why you should be investing in assets. So look, I hope that's useful. I'm going to go out, have some cheesecake and coffee for breakfast because that's just how we roll. Have yourselves a wicked day. We'll speak to you soon. Take care.